Place your bets, ladies and gentlemen.
Greater than 62% of homeowners have a mortgage on their house, meaning that they don't own their home outright. Of course, the goal is to have that home paid off someday. So should you pay extra on your mortgage payment to try and make that a reality more quickly? Well, a lot of factors go into that decision, and we'll discuss tonight on this segment of Money Talks. In the late 1970s, interest rates for homes were as high as 11% before hitting their peak in 1981 at an incredible 16.63%. A number like that really hampered consumers' home purchasing power. But now with 30-year interest rates at 3% and the 15-year in the low twos, should we pay extra on the house each month or look for bigger returns elsewhere?
My wife and I are kind of battling that right now. We're, interest rates are historically low. And we're, we even looking at refinancing and doing some different things. But here's the one thing I'll tell everybody. If you have the income wiggle room, there's two ways you can take. You can, by all means, take it and pay extra and kind of get that mortgage, that 30-year. If you're in a 30-year right now, the 15 year is the popular thing. But if you're in that 30-year and you want to knock some of those years off, by all means, take advantage of that, right?
But as Rojo is about to explain, if you're paying 3% on a loan, you might not want to pay extra on that and instead try and get a better return on the money that you would have used on the mortgage.
So say, the money you're going to put in extra, say you invested for 15 years and the market's going to we usually run our proposals at about an 8%. That's pretty conservative, about an averaged out of 8% return. If you invest the right way, at 15 years, you may have a chunk of money, depending on how much you put in, of course, but you may have a chunk of money to say, here mortgage company, I can pay off whatever. And, so that's a different way to look at it.
And that would be nice, unless the market turns. Then by paying extra on the mortgage, you'd be paying yourself by building equity faster. So you'd have to assess your own risk tolerance and do what you think was most advantageous for you.
It's all going to be based on your income. If you have a set amount of income going to bills and there's an additional amount and you say, hey, well, I don't really want to invest right now, I'm in a good place in all of these different areas, let's knock out some debt. And so, hey, mortgage debt is, if you own a house, that's probably going to be your biggest amount of debt. And so by all means, I think if you have the income wiggle room, by all means, take that opportunity to do so.
And of course, there are differing opinions out there on the housing market for 2022 and what we have in the months and years ahead. And no doubt interest rates will be one of many factors. The Fed recently said that we might see our first rate hike sometime next summer. Here on Money Talks, we'll be watching it for you.